Hello, everyone. I'm Jean-Claude Beyond Mystic, and welcome to today's Beyond the Vault edition of the weekly updates here with Mr. Andy Scheckman. You can find his work at milesfranklin.com. Andy, welcome back to the show. How are you?
JC, good to see you, my brother. I'm good. I hope you are too. Thanks for having me back. The world's getting crazy, that's for sure.
Is it? Are you sure? Everything looks perfectly normal.
Yeah, sure feels that way.
Before we get into the news, the economic news, let's take a look at how crazy things are. We just saw this earlier today. Jimmy Kimmel suggests that Joe Biden's having dementia is, of course, a conspiracy theory. A crazy one at that. Andy, let me share some other news on that front too. I don't know if you guys saw this last James O'Keefe video, kind of like an undercover video here with the top White House cyber official telling all here in terms of what's happening in the background. Joe Biden's illness and perhaps Kamala's exit plan. Anyways, it's a fascinating video, but things are not as they seem. And of course, Biden is not crazy at all. He just tapped John Podesta here to replace outgoing U.S. Special Climate Envoy John Kerry. And of course, Viva Frey was asking the other day, well, question is John Podesta's art collection environmentally friendly? Is it oil-based? To say nothing about the content. But anyways, I digress. Eddie, how's it going, man? It's crazy.
Wow. I mean, you can't make this stuff up. You know, it's interesting. Fox News, I thought Biden had dementia when he was running for president in 2019. And
right.
And there were some videos that Sean Hannity showed last night of the way that he was talking about certain things related to, I think it was to deportation and to the border, and how no one would be deported within the first 100 days of his administration. And the amount of cognitive decay since 2019 and now is startling, because he actually had a little bit of his stuff together. I mean, he didn't look like a complete bumbling fool in 2019, but the level or the speed at which it's decaying is insane. And, I used to, when I was younger, I loved David Letterman. I used to watch David Letterman all the time. And
yeah,
I love
the top 10 list. The top 10
first time I went to New York with my wife, it was like for her 40th birthday. And we went to a deli and had some drinks early in the morning. I don't know how that ended up happening, but we walk out and we're standing in Times Square looking around. What do we do? And this guy comes up to us and he says, do you know where Paul Douglas, was that his name? Whatever. What was the guy's name that played the music? Wasn't that Paul Douglas?
No. Paul Schaefer, the Canadian. Yeah.
You know where Paul Schaefer is born? And I look at him, I'm like, what? And my wife says, Toronto. He says, that's right, you win. And he gives us 2 tickets to he was one of the production crew for David Letterman, and he's like, David doesn't like David only wants a full audience, so here you go, 2 tickets to the Tonight Show with Pearl Jam and Julia Roberts. It was cool, but I used to really like it, and then 2020 came along, and I haven't watched any of them. And it's funny, not too long ago, I flipped on to Jimmy Kimmel, and again he's talking about Trump. It's like they haven't shut up about it for going on 4 or 5 years. And it's so obnoxious for him to say that it's a conspiracy theory. Well, so is his intellect, evidently. It's just crazy. It's nuts.
Well, a lot of these talk show hosts had Trump and they loved him before he ran for president. And all of a sudden, when he ran for president, the whole script changed on us. But anyways, we digress.
Red Mama. Yeah, it is. Paul Douglas was the weatherman in Minnesota. That's right. I spent 50 years in Minnesota. I watched Paul Douglas my whole life. So whatever.
Yeah. You and I will have to do a decode at some point on the movie Fargo. I want to have your take.
Yeah, you betcha. Yeah, sure. You betcha.
That'd be cool. Okay, let's get into some of the crazy news for this week. I'm just going to read a couple of headlines first, Andy, and then we'll start the conversation.
Yeah, sure.
So this one was interesting, of course, this week. The BRICS getting a big boost here as Saudi Arabia joined the group of emerging markets. We'll talk about how they're surpassing the G7 here, GDP also. This on Newsweek, tens of thousands of workers lost their jobs in January. Not a good sign for the economy. On mining.com, top producers push for silver's inclusion as a critical mineral in Canada and the US. That's interesting.
Yeah.
Also could spell big changes here for the
all
price
of
push
these
as well.
all of these articles you're putting up are interesting. Lots to talk about.
Yeah. I just want to give them an overview of what we're going to do here. The LME also targeting now Hong Kong as an option here for warehouse expansion. So that's also showing you where perhaps the price control mechanisms are going.
Well, I'm going to freak you out when we talk about that article. I bet you there's something you don't know about that article.
Okay. Well, I'm excited about that. And of course,
Right.
the UAE completes the first cross-border digital dirham CBDC payment here worth $13 million to China. So that's also spelling big changes here in our world and cross-border payments. And Jamie Dimon says that mounting debt here will eventually spark a rebellion in global markets. Interestingly enough, 2 weeks ago, he was also suggesting that MAGA supporters weren't that bad. So interesting flip of the narrative there for Jamie Dimon. Let's start here. This BRICS nation is still pretty big, again, as you've been talking about this for years. And here we are now. The momentum or the escape velocity that Jim Willie was talking about apparently is already here. Set this up for the audience, Andy.
Yeah, you can call it whatever you want. Some people say it's prophetic. I don't think it's prophetic. I don't know what it is. I don't look at myself that way, but I've been saying this for 4 years that it would happen. People told me I was nuts. I spoke at a family office event, and a lot of the people liked it, but one of the advisors got up and said, that'll never happen. Kind of tried to ridicule me, I guess you could say, in front of everyone. I said, it's going to happen. And you don't have to be overly astute to see the crumbs that are being laid upon the ground at our feet. And if you follow them, you see these things are happening. And so, we had these countries, the 6 countries that were admitted to BRICS, but only 5 accepted. Argentina declined. Milei, the new president, declined, but there was a lot of, let's call it hullabaloo, if you will, over the last few weeks that Saudi Arabia had taken its time in actually accepting the invitation, if you will, for the admittance into the BRICS. It's a massive deal. Yeah. It's a really massive deal. And when you realize that the Crown Prince of Saudi Arabia, his comment was that China is our most important trading partner in oil this year and for the next 50. Now, why does that mean so much? Well, because we signed the petro deal with Saudi Arabia in 1974. That's 50 years. So the words have significance if you understand the meaning. Most people, that would just go, yeah, whatever. But that means something. Mm-hmm. And you can see this progression of events. And, one of the things that I almost find myself being apologetic, I did the other day on Liberty and Finance, for saying the same thing, being redundant in what I talk about. But I'll tell you something. I don't think people understand how big of a deal this growing union truly is, in the respect that what gives the dollar its hegemony, what gives the dollar its hegemony. Hold on once. Hold on, JC.
Go ahead.
I gotta go. My God. I'm sorry, JC.
Happens to me all the time. Go deal with that with a second here. I'll stay with the audience for a second.
Get out of here, you guys. Get out of here. Hey.
Okay, guys, we'll be back in a second here with Andy. We're going to get more on this BRICS conversation and how it's changing the world. And I also want to note, guys, this afternoon at 3 p.m. Eastern, see if I can bring this up. Jenny and I are going to be recording the Beyond Crypto Woo. This is the forecast for the month of February. Of course, this is available live for all of you Insider Access Pass members. It will become available on pay-per-view maybe 2 hours after we've recorded here. So if you want to join us for that, that's going to be at 3 p.m. Eastern. Just log into your Insider Access Pass there to have access to that. Welcome to everybody there in the Rumble live chat. Thank you so much for being there. I'll try to take some questions from you today. There was one specifically also on the mBridge platform. I think Andy talked about that just the other day on Liberty and Finance. With Dunnigan. So yes, I saw the question there, and I'll bring that back up to Andy here in just a moment. So let's see if Andy's dogs are back in control.
I had people walk in my office, and the dogs went nuts. My apologies.
No problem.
So look, in any case, it's a massive deal, and I had to almost apologize for being redundant.
Yeah.
because the redundancy to me is the only important thing that even matters right now when we see this shift away from 50-year-old dollar hegemony based upon the protection of the Saudi kingdom, based upon our relationship with Saudi Arabia and their willingness to sell oil in dollars. It's changing, it's ending. And the United Arab Emirates, who told the world 3 days before 200 delegates show up in their country for a United Nations summit on climate control that we're not taking dollars for oil anymore. This is the country that was admitted alongside Saudi Arabia. And, people were saying, well, Saudi Arabia didn't accept admission. They're hedging their bet. Well, much like the rest of these countries have operated or have been doing their agenda, it has been incredibly methodical, and they are making sure that when they finally do make these changes once and for all, that they will be substantial enough that the West will have very little do to stand up against it. As it is right now, you're talking the majority of all the rare earth metals, the majority of all of the world's commodities, the majority of the world's oil production, larger GDP, larger military might, 2 of the 3 largest nuclear arsenals, larger swath of human population, and it is growing. And the recency bias and the normalcy bias that the mainstream media has us all believing, it is going to get a lot of people hurt, as far as I'm concerned. And when you see a country like Saudi Arabia make a move like this, it is far bigger than I think most people would ever understand. And it is why I talk about the term logarithmic decay. Each one of these things that we see is chipping away at the dollar hegemony, little by little by little by little, and then all at once. And so I mentioned the UAE, 7th largest producer of oil in the world, OPEC member, just got into BRICS along with Saudi Arabia. Big deal. Several months ago, maybe a year ago, I talked probably on your show about Project mBridge. And Project mBridge is, look at it as a bridge between central bank digital currencies. And it gives these countries the ability. Remember at the end of the BRICS meeting last year, when everyone wanted them to issue a common settlement currency. Now, ultimately they will. The task that the finance ministers received at the end of the August meeting in Johannesburg was to go back to the drawing board, present your findings at the meeting in October. By the way, there's 200 meetings between now and the big BRICS meeting in October, 200 all throughout Russia. And so when you talk about 200 meetings, little by little by little, we will find out more and more and more as to what their intentions truly are. But the big meeting in October, they were tasked with coming back and presenting their findings for a common settlement currency. But in the meantime, they were told, well, let's all trade in local currencies. Well, that's exactly what you're seeing here. You're seeing the UAE trade with China and do this using their local currencies, central bank digital currencies, using Project mBridge, which sidesteps the SWIFT system. And what is the SWIFT system? The way that the U.S. sanctions these countries. And you have our brain dead Speaker of the House, this idiot, and the current administration, foolish fools, and the European Union now talking about not just sanctioning the Russian 380 billion Forex reserves, but indeed confiscating them and using them to fund the Ukraine war because Congress has run out of funds to give them appropriations. And of course, they're still asking for more. But
what
the point
could
of
possibly
it
go
is,
wrong, Andy, with that?
well, yeah, no one in the Southern Hemisphere will ever trust us again.
Yeah.
And what Project mBridge is, JC, is the beginning of these countries, regardless if they find a common settlement currency now, this year, next year, or whenever it is. This is little by little chipping away at the settlement status of the dollar, because all these things used to settle in the dollar and trade through the SWIFT system, the intermediary banking system of the United States and the West, that now they don't even need to be on the SWIFT system in order to trade with one another in their own currencies.
Let me bring the link to this mBridge project here from the Bank of International Settlements. There you go. The live link is there, guys, if you want to click on that and go read that further. Speaking of CBDC, Cliff I put out a nice a new graphic yesterday. He said, hey, did you get your CBDC account number yet? Interestingly enough, the scene there behind you guys, you know where we're going with this. That's interesting. I wanted to bring up what you just mentioned about the petrodollar and that 50-year term. Every time there was an attack or a suggestion of an alternate means to the petrodollar, we've seen basically war break out. And what was interesting just the other day, Shadow of Ezra was posting that the White House said that they didn't want war with Iran. This comes, of course, after Iran officially joins the BRIC. And what do we have in the news here today? U.S. to launch multi-day strikes against Iranian targets across Syria and Iraq. Very much now setting the stage. So when Andy says this is big news, it's tectonic plates moving and shifting around the world. Yeah, I would tend to agree. And it was Gerald Salente who often said, I think we coined the term, when all else fails, they bring you to war.
Bring you to war. Hey, can you pull up and share your screen a map of the Middle East, like a map of that area, like the Straits of Hormuz by chance? Because if you look at that, now make that one right there, make that bigger. Okay, look at the countries who have Egypt, Saudi Arabia, Ethiopia, Iran, and Sudan has already just officially applied. They're one of the 30 countries that have officially applied. So as you can see, they have this entire area of the Red Sea. You got India over there, right? Mm-hmm. You got Pakistan who's applied. You have Afghanistan who's applied. They have this whole area surrounded, the Red Sea, the Straits of Hormuz. They have this entire area surrounded. And so the countries that are applying or have already been admitted, they have two things in common. They have massive natural resources, or they have very strategic areas in terms of global trade routes. Mm-hmm. So it's a very, 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 very big deal. It is. And
do you can I get your thoughts on this too?
Yeah.
The last couple of days, we're treated to this brand new enemy, apparently the Houthis. Most people didn't know who they were a couple of days ago. I saw Russell Brand on Tucker Carlson talk about this. And now suddenly they're the big villains here holding up international trade routes and perhaps giving issue to supply chain. Is that what's really going on here? Apparently they're in support of the or they're against the genocide of the Palestinian people. That's what they appear to be bargaining for. But international news is telling us that they're big terrorists here and holding up supply chains. Is this really a move from maybe the petrodollar trying to control that region? As you just said here in this map, they're losing.
Yeah, look where Oman is in there. Look where it is. It's the choke point there, or Yemen, excuse me. It's a choke point. Yeah, absolutely. Just the same way that we went into Iraq looking for weapons of mass destruction, didn't find any. Oh, we're sorry, toppled the regime. We're still occupying their country 20 years later. Yeah. So yeah, that's exactly what it is. And as a result of this Red Sea problem with the Houthis, the cost of shipping from China to Los Angeles just went up by 400%. So if you remember in 2020, it went from 1,000 to 5,000 here. And if you remember in 2020, yes, inflation is an increase in the money supply, period. And I'd like to talk a little bit about M2 and the money supply if we have time, because that's a big deal. But if you remember, a lot of the price inflation was a function of the supply chain problems. Well, this is all tying into supply chain problems. And you could expect that inflation will continue to go higher, regardless of what the Fed is saying. Inflation is going to go higher, 100%, and you will see that. I think they'll find things like the supply chain issues to blame it on. But if you look, M2 has turned up again. Shockingly enough, M2 has turned up after 2 years of it decreasing. But the interesting thing is, after 59 straight years of it increasing, every year for 59 years, M2, the money supply, has increased. And increase in the money supply is inflation, period. Rising prices are a symptom of it, but it's averaged 7% inflation, money creation for 59 years. And 2022 was down 2%, and 1% last year, and now that it's an election year, it's turning up, because if you plotted a graph of M2 with the stock market, they move in near symmetry. But a country that has raised the debt ceiling, I think 79 straight times, and has increased the money supply for 59 years in a row, minus the last two, when they realized that inflation was getting way out of control. They're not concerned about getting inflation under control. They realize that it will never happen, and in fact, that is what they are doing to mitigate the ridiculous amount of spending that we do. But I mean, look, just since they raised the debt ceiling the last time, we've added $3 trillion, and we're borrowing since October 1st $10 billion per day. And the worst part about all this is that for the next year, there is no cap on the debt ceiling. So it's a situation where they'll blame the supply chain problems, and they'll blame the wars, and they'll blame all of this stuff. But the truth of the matter is that inflation is here to stay, and I think people need to understand that. If the Fed it was going to pivot, now they didn't raise rates. They're talking about it, but if they're talking about pivoting when they're 100% above their target, closer to 4 than to 2, they're not getting tough on inflation, and I think that is going to be a problem moving forward. It will get worse and worse and worse.
Well, just the other day on Zero Hedge, Powell was suggesting that they were pivoting on that last pivot. When we last spoke, they were suggesting maybe there'd be 3 rate cuts here in 2024. Now, apparently, that's on hold. So, again, right. Sending markets into some weird turmoil here and trying to understand what's going on. Let's go back to this LME thing. I think that's interesting. You said you had something surprising there to share with the audience that I might not be aware about. Share that with the audience.
Right. So the LME, there was talk a few weeks ago that the LME, which is the London Metals Exchange, would start listing Shanghai Gold Exchange contracts. That was interesting. Shanghai right now, that's not the thing that I'm going to tell you, but the Shanghai gold is about $100 an ounce higher, and silver is about $2.50 higher than it is on the LME or on COMEX. That's called arbitrage. And Chinese, they want all the gold and silver. They want all the rare earth metals. They want it all. And the way that they have been doing it for years is by slowly bleeding the exchanges, using the suppression of the Western markets to achieve their goals, by knocking down the price, keeping people disinterested, and then draining the exchanges. Well, now they are slowly turning up the heat of arbitrage by pricing the price of silver over 10% higher in Shanghai than the rest of the world, and gold anywhere from 4 to 7% higher, if not more, in Shanghai. And these traders that have access to both markets will buy it in buy it in Chicago, they'll buy it in London, and they'll deliver it to Shanghai. They'll make that arbitrage, and that metal will never, ever come back. So that's a big deal. But what people don't realize, what that article is talking about, and that's not the exciting thing I'm going to tell you, but what that article is saying is that they're now going to register warehouses in China to hold the metal being held, or that is backing the contracts. And they're the largest consumer of industrial metals on the planet, let alone precious metals. And now they are going to not only be listing their commodity prices or their contracts on the LME, but they're also going to be holding the LME metals in some of their registered warehouses. Well, the thing that most people don't know, maybe you do, maybe you don't, but the Hong Kong Exchanges and Clearing Center bought the LME in 2012 for $2.2 billion. So think about the little by little and accumulating all of the world's assets. They own the LME. How many people know that? They didn't change the name to the Chinese LME. The London Metals Exchange, the oldest metals exchange in the world, 140-year-old exchange, is owned by the Chinese. And they are slowly turning up the heat of arbitrage. And then they list the contracts on the LME, and then they warehouse the metals in China. Do we see a pattern here? And these are the things that I talk about, where you look at the crumbs, and if you just look at each one, okay, but put them together. They're the ones buying all the gold. 14 straight months in a row, they bought the gold. They buy the gold mines around the world. They go into countries and develop the infrastructure, the maritime channels, the roads, the bridges, the railways. They build the gold mines, help them get the gold out to the world. They take a piece of it. They bought the LME. They're listing contracts. They're storing stuff in warehouses in China that are listed on the LME. Do we see where we're going with this? And I think it's very important to understand that instant gratification is not fast enough in this country, but they are setting up one hell of a chessboard, a really, really, really scary chessboard where they control most of the world's rare earth metals, most of the world's precious metals. They're gobbling up all the oil and future oil production. They're making relationships in a cooperative fashion around the world, not the way that we do, where we go in and through coercion, we bully. They do it through cooperation. And say what you want about their economic problems, they have way more in the way of assets. They will be able to weather whatever is thrown at them. And I think that the infrastructure that they're setting up is kind of really very concerning if you look at it closely.
Yeah, and it brings to the forefront the adage, who has the goal makes the rules. And it very much looks like they're going to be making the rules here for the next 50 years or so. Let me bring up the comment from Paolo was talking about the hawkish Fed hammers dovish market. No cuts imminent, removes the banking system soundness comment from the speech. That was interesting here because regional bank stocks are crashing again. We can talk about this. This Crete crisis also rearing its ugly head. And this hyper balloon here of currencies will continue to collapse here in 2024. I'll read something a little bit later that Cliff High sent me about hyperinflation here and how maybe some of the moves that the Fed has already communicated is setting up here for perhaps a really, really big wave of inflation here in February or March, on top of what you've just mentioned, which is already bad for the economy. Speak about that here, the regional banking crisis, what your gut feeling is right now. Why is also Jimmy Dimon talking about this rebellion here of mounting debt? What's going on at the banking level, Andy?
Well, I mean, yeah, that's the whole problem. There's all of this debt that needs to reset over the next 2 years. A good portion of it reset last year, and you'll see a bunch of it reset this year and next year. Hundreds of billions of dollars. The majority of the commercial real estate loans and leases are owned by the regional banks, and so is the majority, over 70% of all the small business loans. And so when you talk about this mountain of commercial debt, that article talks about Washington, D.C. as one of the places that is experiencing this. I just read the Xerox building in Washington, D.C. just sold for $25 million. It was last purchased for $145 million in 2011. That's an 83% loss on a 19-story office building. And, so how many buildings are like that in all of these cities? And you look at these inner cities, you look at what's happening in San Francisco, their property value, the largest hotel in San Francisco, the owners just walked away from it, gave the keys back to the bank. I wonder why. Same thing with the malls in San Francisco and Whole Foods, Los Angeles, Philadelphia, New York City. These people are dead in the water. And when all of these loans and leases need to be reset, it will put people out of business. The loans and leases were purchased at a 0% federal funds rate. The cost of money is up fivefold, at least in the federal funds rate. The cost of the mortgages at least threefold. And so you're talking not only whether or not they can afford it, do you want to afford it in a hellhole like San Francisco? Mm-hmm. Do you want to re-up again at a higher rate and hope things get better in a part of the country that is experiencing lawlessness? And I mean, you saw what happened in New York. I mean, a freaking cop got beat up by a mob of illegal immigrants who were then released without bail. Goodbye. I mean, this country has lost its bearing. These inner cities are dead in the water, and all of these banks that own all of the mortgages on this, or the leases and the mortgages and the paper, they're dead. They're dead. And you're going to see, I believe, a cascade of bank failures, all related to the commercial real estate industry. And the reason the residential real estate market hasn't been the one that's gotten clubbed is because the majority of the mortgages that are out there right now are all 3%, 4%, 5%. And that's great on a $500,000 mortgage or whatever when you got a good paying job until your company goes bankrupt because of its commercial real estate problems and the economy slows down. And as Jamie Dimon
or when your fixed rate is due at double or triple what you fixed it at a couple of years ago.
And that's what Jamie Dimon is saying, that there's so much debt out there that in the environment we're heading into, the ability to service that debt becomes severely compromised. Yeah. And as that happens, now all of a sudden the residential real estate market starts to tumble because people can't pay for their mortgages, and so that'll be last on the chopping block. But we're not immune to those problems either. And you're seeing the values of homes come down, and you're seeing the demand for housing come down, and all of this centers around the fact that interest rates have been suppressed for so long, and money was so easy that it created massive distortions. And by keeping interest rates and throwing money at it, the Fed basically incentivized everyone to take on risk, including the banks. And they didn't even think they were taking on risk by buying treasuries. But then they raised rates 11 times in a row, and they've screwed the whole system. Now they're at the crossroads. Do we raise rates and continue to put stress on the system? Do we lower rates and tell the world that we've chosen inflation over austerity, that we will never balance our balance sheet ever? Or do we just sit still and hope it goes away? I mean, they're screwed. And I think they realize that. And then you look at the BRICS stuff, which adds fuel to the fire, because if I see hyperinflation too, I don't know what Cliff has to say about that. He's a smart guy, but I see hyperinflation when the dollar is dumped by OPEC. Look, you got Iran, Russia, and now the United Arab Emirates, 3 of the BRICS members who said they're not going to take dollars for oil. You have Saudi Arabia, who said we are open to taking other currencies for oil. You have the United States, who signed an executive order to go green. We have weaponized and are now speaking of confiscating Russia's $380 billion to fund the Ukraine. Like that. If they say, look, ideologically we don't align, you guys are going green, the BRICS and the Belt Road and all of the countries that we're part of, that's 85% of the population of the planet. We're not. Yeah. So thanks. But no thanks. And when that happens and they all dump dollars, there's your hyperinflationary moment. And think about it, JC. Stocks, bonds, real estate, and the banking system all collapse, as does the dollar. There's your Klaus Schwab moment right there. It all collapses, and then you have a villain to point to. That villain is Xi Jinping, Putin, and OPEC. How could they do it to us? And that's why I think this is not too stupid to be stupid. This is thought out and planned, because either that or everything that we are doing is incentivizing the world to go a different way, whether it be within our borders or outside.
It's important to see them. I appreciate these conversations so much, Andy, because we're helping each other, but we're helping the audience also connect the dots. The mainstream news doesn't want to talk about this, and they're like, pretend everything is fine in La La Land. Let's get into this other article you sent me here too from mining.com. Top producers push for silver's inclusion now as a critical mineral here in Canada. Just looking at the chart of silver also too, it screams time to invest, of course, but now we're seeing all these political, geopolitical, war pressures, and on top of that now producers asking this to be a critical metal. In fact, that was also in the Webbot data reports a couple of years ago. It was early, mind you, but it was also talking about silver being too valuable here to be used as money. It would become some type of strategic metal. Is that the inklings of that we're starting to see?
Well, yeah, and it's interesting. So for a long time, I've been saying to people, there's 500 ounces of silver in the tip of a Tomahawk cruise missile. And some people would say that's not true. Some people say that is true. If you Google it, you'll see that. And so I said that 2 years ago at the Vancouver Resource Investment Conference, and a man in the audience came up and said, "Yeah, I used to work for the Department of Defense. I'm a consultant still. Everything I'll say to you here is declassified." He said, he always makes a point of saying that, but I worked on development of the Tomahawk missile. And he says, "I know there's silver in it. I don't know how much. I'll get back to you on that." After a long conversation, I saw him here 2 weeks ago speaking in Vancouver, and there he was. Showed me all sorts of declassified pictures of test firing it and all of this stuff. And we had a long talk about it. And he said, "Yeah, there's almost exactly 500 ounces in the tip of a Tomahawk cruise missile. You're right." So I look at the Silver Institute numbers, which show a 200 million ounce shortfall supply demand, and they don't talk about military applications at all. Shockingly, zero. And so when you talk about why would there be a bank like Bank of America and JP Morgan before that would have 1 billion ounces short in silver, the largest concentrated short position COMEX ever, right? And you got all these 3 or 4 of these big commercial banks stepping on the price of silver. Gold is not being stepped on quite the same way, but why? Well, think about the military industrial complex and the high-tech weaponry, the all of the missiles, not just the Patriot, and the high-tech aerospace and the stealth bombers and all this stuff that use massive amounts of silver. And even if we're not involved directly in the war, we seem to be funding munitions all around the world. And so if you want to enrich this group, and I'm sure they do, you need silver. So you step on silver and you don't allow it to go higher. But what they didn't count on when they were doing this all these years is a country like India, who imported 400 million ounces in the last 2 years, which is almost double all of the metal held on COMEX and 10 times what is in the registered category. Those are the bars that are available for delivery.
Yeah.
There's registered and there's eligible. And the eligible, there's over 200 million ounces in total silver, like 200, let's say, I don't know, 220 million or whatever. Actually, I can tell you ballpark, there's 276 million ounces in COMEX, of which 234 million of it is eligible. That would be, I have 2 clients, 2 separate clients, and we have 9 vaults with BRICS around North America. The one in New York City is a COMEX vault. It's the only one. I have 2 clients with over 1 million ounces each in 1,000-ounce bars. That's eligible. They're not selling it. Or, Sony could have an account with silver for their whatever, for their manufacturing. That's not for sale. The registered category has 41,580,000 ounces in it. Those are the bars that could be delivered, right? So that's it. And in the past 2 years, India's imported 10 times that much. So if you realize that the contracts right now are 1,600%, almost 1,700% rehypothecated, meaning if everyone stands for delivery who has those contracts, then 1 out of 17 gets silver, the rest get cash, and then the whole exchange blows up because there's no silver left to be sold. So anyways, the bottom line is simply this, is that the military industrial complex is stepping on the price of silver. And I believe when you look at what silver is, aside from its use in green and digital applications, aside from its renaissance and monetary realization, the military industrial complex doesn't want us to know that silver is a strategic metal. And I give a lot of credit to these mining companies, Keith Neumeyer being one of them, that are saying this is a strategic metal. They know exactly that. And this is why, I think you ask yourself, why would anyone be naked short that big of a position in silver? It's as dumb as a mud wall. Well, think about what it really means to the companies that, like Raytheon or whatever, that are making very, very high-tech, sophisticated weaponry. It's interesting that the Silver Institute conveniently omits that from their supply-demand fundamentals. And so, yes, I think it is a strategic metal.
That says nothing also about this new world of technologies coming in, and what Cliff I was coining new electrics, and how silver would be used in a lot of new applications here as we move into sci-fi world. But that's for another conversation. Let's end on this. Andy, I have to prep for this Beyond Crypto Woo forecast here in just a little bit. But the U.S. is living on borrowed time here. This was an article on Zero Hedge on February 1st. Looking at what we're seeing now, the momentum of the BRICS, these calls for war, the saber rattling for war, the bankers warning about this debt implosion here in the United States, the border crisis. Everything seems to be pointing here to either a controlled demolition. This seems to be planned, as you said. It's too stupid to be stupid. Is there still time for people to maybe extricate themselves from, as best possible, from the old systems here before it all implodes? Like, how much of this borrowed time do we have left, Andy?
JC, what's really interesting, man, is that I've seen this so clearly. It's nuts. And I've seen it for 4 years. But honest to God, when it comes to that moment where I think it will happen, where OPEC says, look, you've really incentivized us to go a different way. Thank you. But we're now no longer taking dollars for oil, and the dollar collapses. which is, I think, what they want. It's the only way to get out of this problem without falling on the sword. I mean, Richard Russell always used to say, inflate or default. He was my mentor. 15 years ago, he was saying that. And I say it's true. You know, you got 155 trillion in debt, 5 trillion in assets. We're at that 130 debt to GDP ratio. No one's ever come back from that without hyperinflation or default. And I think that this is what they want to do. But when it comes to that moment, my mind goes dark. I don't know what it's going to look like. I think it's going to be scary as shit. And I think if you're not prepared, if you are not prepared as though a hurricane is at your door, you're in big trouble for a while. And that means a gun or something to protect your family with. That means food, water, batteries. That means a whole bunch of stuff that you never thought you would need wherever you are, because hurricanes aren't there. But this is a different kind of hurricane. We've let 12 million people into the United States, most of which we have no idea who they are. If 0.2% want to create problems, that's 24,000 people. And a lot of these people are young men. And you see it, they beat up a cop in Manhattan. I mean, really? What's going to happen when there's no money or they can't make a living and they're stuck here? They'll result to crime. What happens if the whole system breaks down? And these cultural wars are really exacerbated in economic calamities. I think it's scary, and I wish I didn't. I have never sold gold based upon fear. I'm scared. And to me, gold is wealth that's outlived everything. And that's why the central banks are buying it. They know it's the place to be. But that doesn't take or doesn't change anything about how do you protect yourself. You do the best you can, and you create a community. The problem is everyone thinks we're all crazy. And maybe they don't think I for sure everyone thought I was crazy 3 years ago when I was saying this. Maybe not so much anymore.
No.
But I will tell you, as Holter always says, this is not too stupid to be stupid. This is planned. And the instability in this country, the fact that we have record amounts of debt, lowest savings ever, the banks are teetering on the edge, the divisiveness, the open borders, the wokeness, everything, the elections, the justice system, everything is upside down. And the world sees this. And that's why they're less keen to side with the U.S. than to choose sides with the BRICS, where they're finding safety in numbers. And I think the recency bias will be very dangerous. So do the best you can to prepare. Hope to God that you don't ever need to use it. But I think it's a big mistake if people don't, and they should start yesterday.
I should start yesterday, indeed. I just put a link to a post from Clefai here in the live chat. You guys can go read that. He's picking this up, of course, from his WebBot data analysis, and he's suggesting here that February, March, and April, all the way to June, we're going to be tested like we are in a martial arts dojo, where we're going to be fighting here a higher rank belts than we are currently facing right now. So be prepared for all of that. Go read this article here. It's a sober thought here about all of the changes. And when you say, Andy, your mind goes dark when you see, well, when that moment happens, this is kind of what the Cliff is alluding to here. So prepping for that, understanding, being strong, mind, body, of soul here, I think is good advice. So go read this article by Cliff, guys. And yeah, in the meantime, if you're looking for gold and silver, you can find that here at beyondmystic.net/silver. If you're on the Canadian side here of the audience, you can go to mfbullion.ca/beyondmystic. There they have the 10-ounce silver bars on sale at $2.99 over spot. Andy, what's the inventory looking like here on these Liberty coins? Did a lot of people call in on that last week when you put up?
Yeah, we still have some left. A lot are gone, but we do have some left. We're also doing name brand 100-ounce bars. I want to say $1.39 over. I haven't seen them that cheap in a long time, way over 4 years. I'll tell you, and then I'll let you run. I will draw the analogy to where we are right now, and I mean this sincerely. We are in the eye of the hurricane. We were all bitch slapped by the front end of it the last 4 years. And then now we're quiet. But what I don't I guess this is why there's a whole level of, or whole theory of investing called wave theory, Elliott wave, Kondratiev wave, all based on human emotions. And, people were scared and it was crazy in this industry. And then, here we are the Fed talking about a soft landing. I don't know people. I don't know what they're looking at. I guess I don't know what the people. We've had very, very, very large sales this year, but much smaller volume. The whole industry is that, and every company in the industry, it has great inventory and the lowest premiums we've seen in 4 years. And to me, it should be the antithesis of that. To me, where we are now is scarier than where we were at the beginning of the pandemic. And I'm dead serious about that, because the macro changes and what's happened to this country in a very short period of time is far scarier. And the fact that people are reactionary instead of do things in a proactive way is mind-boggling to me. So I will simply say that the inventory, whatever you're buying, everything's on sale. It's never been better in over 4 years, and immediate availability. And all it takes is one of these banks to fail and then be bailed in, which, maybe your listeners know, but most people don't. I was sitting in front of one of the wealthiest families in America 2 days ago, clients of mine, and very, very, very wealthy family, went top 40 in the United States. And I asked them, do you know what a bail-in is? No. Do you know what the Belt Road Initiative is? No. Do you know what the BRICS are? No. And by the end of the discussion, I think they rued having me come there. And because I think I ruined their appetite for the rest of the evening. But these are things that you need to understand. And if you don't, look, all it will take is one bank to bail in. One. And people say, my God, they lost everything. If you Google bail-in, there are two things that there's 4 or 5 points that come up. 2 that need to be thought about. 1, the FDIC has 3 to 5 years to when they act as the custodian or whatever it's called of remediating the bank. They have 3 to 5 years to pay you what you have FDIC insurance up to $250,000. 3 to 5 years, right? But their number one task is to make sure that the share owners and the unsecured creditors bear the losses of the bank. Well, who are the unsecured creditors? They are the depositors. That was a change in definition during the Dodd-Frank Act. So if you have over $250,000 in a bank, and there's $7 trillion in uninsured deposits in the United States, if one goes down and it gets bailed in, let's just pretend this bank in New York fails and is bailed in, not bailed out, the way the Dodd-Frank Act says it's supposed to be, this country will lose its mind quickly. Because I would say, I bet you if 2% of the population knows what a bail-in is, I'd be shocked.
And Andy, on that note too, people tell me, JC, stop talking about $250,000. Your viewers don't have $250,000 in the bank. That's not the point Andy is talking about. The FDIC doesn't even have enough money if 2 or 3% of the banks go down. So that means that every deposit, even under $250,000, will be lost to you. That's your point, Andy, too.
And there were banks during the Great Depression that closed and never opened back up. The FDIC has $128 billion backing $18 trillion in deposits. You're talking, a few cents on the dollar. And so it is real and it is true. And if they do pay you, it'll be in dollars that were created by the Fed that will create hyperinflation. Go back to what Cliff says. So all roads lead to the same place. You can kick the can as far down the road as you want. The dead end is down there at the end of the road somewhere. And we're not there yet. But look, I wish I wasn't such a buzzkill, because I've never been this way. But I really do believe that with every passing day, it's getting scarier. And I want people to think about one last thing before we go. Between now and the end of October, when the big BRICS meeting takes place, there's 200 meetings that they have in Russia. Every day there's going to be a new news story on the BRICS. And, 1 month later, the biggest election in this country's history. Forgot about that. So between now and the fall, do you really think that things are not going to get a little bit off the rails? And then I look back at how this industry is in the eye of the hurricane: quiet, low premiums, great availability, and very little volume comparison to what we've seen the last 4 years, and it just blows my mind. So to me, it's a good contrarian indicator. And you know what, JC, if you are not a contrarian right now, you're going to be a victim. That I do believe.
Yeah, that's a good point. Hey, and speaking about the waivers, Cliff sent me this earlier too. The waiver guys are saying that there will go, they're talking about Bitcoin here, going to 80K here before the halving in April. We're already in February. We're sitting at $40-something thousand today. We're going to get into that in a big way here just next. Now, guys, if you're part of the Insider Access Pass, Jenny and I will be recording the Beyond Crypto Woo. This is the financial forecast here for February. You guys don't want to miss that. In the meantime, of course, you can get some silver at beyondmystic.net/silver. And of course, this was the amazing, the one and only Andy Scheckman from Miles Franklin. Andy, thank you for being on, man. I'll have you again next week on Thursday at 1 p.m. Eastern.
Well, actually, I was going to ask you if maybe we could do, I might have to take 1 week. I'm going on my annual guys ski trip to Vail next week, and I come home Thursday night. So might have to take 1 week off.
Take a break.
I love this show, JC. I think you are a
Hey,
smart.
I'll come and join you guys and do a few après ski parties with you guys.
Yeah, I would love it if you came. But I might have to take 1 week off, but I promise you I'll be back the following week. And there's so much to talk about by then. I know it. So I'll see you all real soon.
Sounds good. Thanks a lot, Andy. And don't break a leg on the slope. All right. Take care, guys. Au revoir.